Reddit just reported one of its strongest earning reports for the entire year. Revenue exploded, margins snapped higher, free cash flow went vertical, and the market barely blinked. Actually, the stock is down close to 50% from its 52-week high. Today we're breaking down why Reddit is one of the most misunderstood growth stories in public markets, why its AI data deals are just getting started, and why this company is starting to look like a future S&P 500 member hiding in plain sight. Let's start with the receipts. Reddit didn't just beat expectations, they blew straight through them. For Q4 2025, analysts were expecting $667 million, but Reddit reported $726 million, which is a 70% increase year over year. But the real surprise was the bottom line. Analysts were modeling 93 cents in EPS, but Reddit delivered $1.24, a 33% beat. For the full year, Reddit generated $2.2 billion in revenue, up 69% from 2024, and for the first time in company history, they were GAAP profitable for the full year, posting $530 million in net income. Gross profit margins have been consistently going up, and it now sits at a 91.2% gross profit margin. This is not a turnaround story anymore, it's a scaling story. If we hop over the fiscal and add capital expenditure and total revenues, you can see that a company like Meta is spending around 25 to 30% of its revenue. Meanwhile, Reddit is barely spending any of its money on CapEx. You can barely even see the line on the chart. You can see that for the full year, Reddit just spent $6.7 million on CapEx. That's 0.3% of revenue compared to Meta's 25 to 30% of revenue. Reddit doesn't need to spend a lot of money just to compete with AI or long shot bets like the metaverse. Reddit is doing great in its capital light business, making 70% year over year. Last quarter on CNBC, Laura Martin from Neiman explained why Reddit is such a powerful model and how its growth and its multiples are actually compounding so quickly that it's cheaper than you think.
Which was, you called Reddit a money-making machine. I don't think I've ever heard you, being a very pragmatic person, use that kind of ultimate, very bullish language.
68% revenue growth. They converted 30% into free cash flow. And of the incremental revenue in the 90 days ended September, they converted 80% into free cash flow. I've never seen they've had 6 quarters of over 60% growth, which means whatever multiple you think you're paying, they're doubling their size every 2 quarters. And then they're flowing it all 80-cent dollars down to the free cash flow. In a world where people are spending a ton of CapEx in my hyperscalers, Reddit spends $2 billion, which means everything comes to the shareholder in terms of the earnings. Our earnings went from 16 cents last year to 80 cents.
Wow.
4 quarters later. I mean, a money-making machine. It's amazing. Reddit's doing excellent work on the execution side.
Now, what's really changed over the quarter is actually the free cash flow. So if I hop over here to the free cash flow statement and scroll down to free cash flow and free cash flow percent change. Let me turn off the revenues. You can see that free cash flow is actually going up tremendously, especially this year. If I change this to quarterly, Reddit generated $264 million in free cash flow just this quarter. And a year ago, that number was around 90. So between a year ago and today, the free cash flow has 3x'd in 12 months. And here's why that's special. If I scroll back down and I add the CapEx back, Reddit is not burning cash on big data centers or AI projects. Reddit, again, is a capital light business. So of course, if you've been on Reddit, you've seen they added Reddit answers and some language translation so that people in other countries can see posts from across the world. But these are more so software optimizations and not infrastructure bets, so this doesn't cost Reddit nearly as much. So this kind of cash flow is what institutional investors love in a company. Scalable, high margin, and repeatable. Now let's talk about user growth, which is arguably the most important thing for a social media company. US daily active users were up 9% to 52.5 million. International numbers were up 28% to 68.9 million. Overall, that sums up to a whopping 121.4 million daily active global users. On a weekly basis, the United States grew at 12% to 193.4 million users. Internationally, users grew 34% to 278 million users, leaving a global total of 471.6 weekly active users. This chart makes it easy to see how Reddit has been able to grow users consistently since they became a public company. Average revenue per user was also up significantly this quarter. In the United States, it was up 53% to $10.79. Internationally, average revenue per user was up 38% to $2.31. Now looking at the quarterly average revenue per user globally, Reddit has been able to increase their revenue from this significantly, up over 40% the past 3 quarters. I personally have been seeing more users engage in Reddit's app. I want to say like a year ago, the most upvoted thing I saw on Reddit was probably around 15,000 upvotes, and now I'm constantly seeing things with upwards of 60,000 upvotes. These minor improvements are actually really improving Reddit's user experience, showing people more relevant content, stuff that they actually want to engage in, and stuff that they want to share with their friends. In the UK, Reddit has officially overtaken TikTok as the 4th most used social media platform. Even in the US, we have seen TikTok uninstalling Spike ever since the US was officially a part of that trade deal to buy TikTok. So I wouldn't be surprised if Reddit eventually overtakes TikTok in the US too. I think Reddit ads have the potential to be some of the best ads on the market. The main reason why is because people go to Reddit with questions. 51% of total online mentions of purchasing are discussions on Reddit. And 85% of people who use Reddit agree that people post things that are honest and truthful, making it a very trustworthy source for people to advertise. People come to Reddit for answers. 90% of users trust Reddit to learn about new products and brands. On Reddit, a lot of people are going there to make buying decisions. For example, there's a subreddit called Buy for Life, and if someone is looking for, let's say, a jacket that you could buy for life, someone like North Face could go in there and advertise, this is a jacket with a lifetime warranty. Or if you're in a health subreddit and you're like, hey, I'm having this issue, I don't really know how to deal with it. If you're a pharmaceutical company, you could advertise your product there. Maybe you have a solution to their issues. Personally, I'm into watches, and I am in the watch exchange subreddit, which is basically a bunch of people selling or trading watches between one another. And I have seen watch companies just place their advertisement in there, being like, hey, you're into watches, look at this watch, which is better than something like Meta, where you're not going on Instagram to shop for watches or to buy something. You're going to scroll through content, see your friends and family. One of the other things on the earnings call that I thought was important was that Reddit authorized its first share buyback, $1 billion, which for an under $30 billion company is actually a pretty large sum. So this is what happens when a company generates more cash flow than it can immediately reinvest in high returns. Buybacks become an efficient use of capital. I mean, Reddit is growing at 70% every year, so why shouldn't they put some of their cash towards the actual company itself and buy back those shares? At the same time, management also said that they're looking at some smaller companies, strategic acquisitions, particularly in ad tech, tools that can improve monetization effectively. I also want to touch on the AI side. Of course, all these companies talk about AI, but Reddit actually makes money from it. So in 2024, Reddit signed a deal with Google and OpenAI. Google pays around $60 million a year, and OpenAI pays around $70 million a year just to have Reddit's licensing. There aren't many companies that have the data that Reddit has, where it's people publicly having conversations about products or use cases or places to go. So that is what these AI companies want. So both those contracts are up for renewal coming up the end of this year into 2027, and this is where the leverage shifts. So Reddit in 2024 was a much smaller company than it is now. So I think Reddit has actually learned how important their data is to these AI companies. So I'm assuming these deals are actually going to go up exponentially in value, which is going to be just great free money for Reddit to print. Also, don't forget, Sam Altman owns 9% of Reddit. Just saying, alignment matters, and those revenues are just pure margin. In Reddit's scenario, I think we need to use a different valuation approach, which I would go with the PEG ratio. So the PEG ratio looks at the valuation relative to the growth. So a company trading at high multiples isn't as expensive if it's growing exponentially. But here's the key point. Reddit's growth isn't slowing, it's speeding up. If we jump back to fiscal and we look at the revenue growth, you could see that revenue growth isn't slowing down, it's actually speeding up. For example, in 2023, it was 20% revenue growth, 2024, 61%, and this year they just ended it with 70%. So due to that, Reddit is currently sitting at a PEG ratio of around 0.59, and anything under 1 is considered undervalued. Basically, that math being price to earnings over revenue growth. Alright, so here's the conclusion. Let's put it together. Accelerating revenue growth, full year GAAP profitability, exploding free cash flow, billion-dollar buybacks, and AI licensing deals that are just getting started. These are the exact profiles of a company right before they get added to the S&P 500, which Reddit has been in discussion of being added for quite some time now. People still think of Reddit as a place for memes, which I totally get, but you're a professional. You see the numbers. This is a high margin, asset light, data platform that's only beginning to realize its power.